Well, that's why my concern is it's not that silver's going up. This stuff is coming down.
The world-famous author has penned down his prophecy about the upcoming stock market crash, and it certainly comes with the sign of the times. Keep your eyes peeled until the video's done, because this video has something that could make or break your bank account. Recessions never come with a knock on the door. Stay tuned or your finance will get on the floor.
Turning to the stock market, Animotion is up an eighth. Yes! After plunging 75 points this morning.
With the stock market in freefall, Bitcoin moving for the 9-month high, and real estate cooling off, it's hard to find a safe haven in these turbulent times. There's a drunken way the market is going along. Everything seems dry as a desert. Our savings seem like the last drop of water in the middle of Death Valley. But the Rich Dad Poor Dad author Robert Kiyosaki has a different point of view. He believes that now is the perfect time to get richer. What we may think of as a tsunami coming at us may turn out as a stampede for stamping profits, least for the big cash evil baddies. Kiyosaki made a fortune during the Great Recession by betting against the odds, and now he's predicting an even bigger crash. But how can you make the most of this volatile market? The credibility factor. Many viewers may start buzzing, but this man says it every other Monday. What's new and what does it change anyways? It is arguable as why does his opinion matter in the first place? There are a bunch of legit reasons why this guy has the audacity to speak what he is speaking. Let's take his legendary advice from last June when he tweeted. For investors who are looking to beat inflation, Robert Kiyosaki had come up with a novel suggestion. Why not just stock up on all the things you normally buy anyway? Instead of losing money to pesky price hikes, why not stockpile some tasty tuna and delicious baked beans, as well as essential items like toilet paper and garbage bags to save yourself a few bucks? It's a win-win situation. It sounds more like my granny's grocery advice rather than some investment. Oh, alright, enough with the dry jokes. We still can't argue his credibility. On a podcast, he revealed just how he had borrowed $300 million at the lowest point of the real estate market back in 2011.
When the whole subprime mortgage came down, I borrowed $300 million to buy the best real estate in the world.
This turn made him the most enormous fortune of his life. Surely most of us cannot borrow $300 from a friend, let alone add the million in front of it. Money talks the talk. He cannot be written off the books because one of the biggest authors in the world of finance writing does have some sort of credibility to his name. And let's not forget that he is one of those names who accurately predicted the fall of the giant Lehman Brothers, which filed the largest corporate bankruptcy ever of $619 billion US.
You're really that worried about Goldman Sachs and Lehman Brothers?
Yes. I'm afraid the Federal Reserve will eventually or come close to bailing them out.
The gut and the prophecy. The upcoming crash has an array of different worldviews. Some see it as the judgment day of finance, and for some, it may be a golden ticket to the money factory. Even if we pick the best case scenario, things still don't look so good. There's a problem going on with the current age of currencies where a majority of them are just not meeting ends meet. Whether it is dollar, euro, pounds, something's definitely off the track and we all feel it. On the February 22nd episode of the Rich Dad radio show, Robert Kiyosaki interviewed Chris Martenson, the author of the re-released book, The Crash Course. In this book, Martenson explores the crises that the world is facing in the current era. Kiyosaki praised Martenson's work, calling it a book of prophecy as it warned us of what was yet to come. Kiyosaki then shared his work Prophecy, which implies that the biggest stock market crash in history is still to come. For years, Kiyosaki has been warning us of an impending economic crash. He believes the US Federal Reserve's printing of billions of fake money is the cause, and warns of a rough landing for the world. With increasing levels of bad news, bankruptcy, unemployment, and homelessness, Kiyosaki is advocating for alternative investment into assets like Bitcoin, silver, and gold as a way to protect the health from the looming financial storm. The drowning market? Kiyosaki has also been an outspoken advocate for cryptocurrency investments, citing it as having one of the greatest potential upsides of any asset class. However, in May of this year, during his radio show, Kiyosaki made a surprising statement that he believes Bitcoin to have no value. "I trade Bitcoin, but I don't think it has any value. I just play the game," he said. Is this a sign that the crypto craze is coming to an end? It's not just this. Kiyosaki has sent shockwaves across the world with his latest prediction that Credit Suisse is the next bank likely to collapse. Speaking on Fox Business, Kiyosaki quotes that the bond market is the biggest problem of the economy and could put the US in serious trouble. With financial markets already reeling due to the fall of Silicon Valley Bank and Signature Bank, Kiyosaki's words have put investors on high alert. Well, if he's up with indicating the problem, there's certainly some sort of suggestion that he upholds. In an interview, he cited just how a person can escape such financial hardships, at least up to some extent. The 5G formula. Kiyosaki stressed his 5Gs on how to survive any economic recession, including grub, ground, gasoline, guns, and gold, stressing that, quote, "You gotta have ground for food, gasoline for your car, guns, gold. I've been preparing for years and it just sits there." Kiyosaki expressed concern that the rising inflation would, quote, "wipe out 50% of the US population financially, as well as that retirement plans and pensions would be unpayable in case the stock market crashes." According to him, fiat money no longer has value due to inflation and central banks overprinting it. As he explained, you can go anywhere with gold or silver and they say, "Welcome." You go with this stuff, paper money, they go, "We don't know what its value is anymore," because they're printing so much of it. With concerns of an economic recession on the rise, Kiyosaki has a message for us all. Invest in the 5Gs, grub, ground, gasoline, guns, and gold, in order to prepare for any economic downturn. His words of wisdom suggest that investing in these tangible items can be a key to survival in the face of rising inflation and an unstable stock market. Well, no matter how you take it, it's far better than grandma's grocery advice. Big Bezos talks. You can doubt the credibility of anybody but the man who made life from the crash itself. Bezos has been vocal about the problem that the investors will be up against in the near future. The recent economic alarm from Jeff Bezos doesn't sound great. The myth, the man who rose out of the dot-com crash, recently warned that the economy is slowing down and that layoffs are happening in many sectors. He suggests taking some preventative measures and holding off on big purchases like TVs and cars until the situation improves. But don't lose hope. There are still investments that may perform well even if the economy falls into a recession. The US Central Bank is taking action to prevent an overheated economy and rising inflation, raising interest rates from near zero levels in March to a range of 3.75% to 4% today. If the trend continues, this could be the first time rates have surpassed the 5% mark since 2011. In his interview with CNN, Bezos mentioned 3 investments that investors should look into. Contemporary art. You may have thought art was just a pretty canvas to hang on the wall, but it turns out that it could be a great investment. According to Deloitte, art is now a $1.7 trillion asset class. That's almost half the size of venture and private equity combined. Contemporary art has also outdone the S&P 500 for the past 26 years with a whopping 131% return. Plus, Citi reports that art has a near zero correlation to stocks, which makes it an excellent hedge against market volatility. Who knew art could be so profitable? Real estate. Now, you may be wondering why it is recommended despite rising mortgage rates. Well, the investment management company Invesco has done some research and found that real estate has actually demonstrated its resilience in times of rising interest rates. They looked at the federal funds rate between 1978 and 2021 and found that in 10 distinct years, where the rate increased, private real estate outperformed equities and bonds 7 times and public real estate outperformed 6 times. So, While it may seem counterintuitive, real estate is definitely worth looking into as a solid investment. This was also advocated by the IMF Managing Director, Kristalina Georgieva, while on podium warning about shock-prone world struck by pandemic, wars, and disaster. Bezos' third suggestion might sound a bit dizzy, but let's roll it anyway. Fine wine. This might be one of the weirdest types of investment advice, but it does make a toll of sense once it hits the core of logic. Out of 3 of his recommendations, Bezos recently suggested looking into fine wine as an investment. It turns out, fine wine is a great hedge against inflation. While the S&P 500 has dropped 24% year to date and 18% in the past year, the LiveX Fine Wine 1000 has actually gone up 14.1% and 22% respectively. But here's the thing, investing in fine wine isn't as accessible as traditional stocks. You need to have a specialized knowledge and have the right storage conditions to store the wine in. It's better to know the thing before you put the money in, or it happens to be another Wojak story. Another investment which may be the best investment during the financial crashes are precious metals. Kiyosaki has been vocal about just how valuable these asset classes are. Precious metals are the best investments during crashes because they are heavy and hard to lose. So, you'll never have to worry about them evaporating away like your stock portfolio. Plus, they look great on your mantle and will sparkle during the darkest of economic times. The gold and silver rush. Investors looking for reliable returns should consider precious metals as a viable option. Since 2000, gold and silver have both provided strong returns, with gold increasing by an average of 5.8% per year and silver increasing by an average of 4.7% annually. In addition to price appreciation, gold and silver have also provided investors with a hedge against inflation and market volatility. This means that gold and silver investors have seen their investments appreciate in value in real terms. With its strong performance and potential to hedge against inflation and market volatility, precious metals have proven to be a reliable asset for investors over the past 2 decades. So if you're looking to add some sparkle to your portfolio, why not consider buying gold or silver? The verdict? There's certainly a financial calamity on the way, even if we put on the most optimistic point of view. Whether it may be bad or for better, only time holds the opening of this crash letter.
I'm not saying it's going to happen, or if you're a millennial and you got mom and dad who are living in La La Land with their 2 401ks, you might be in serious trouble.